Hey, I'm Johnny Lee with the Rise Real Estate Group. I'm a real estate agent right here in Los Angeles.
I'm Brian McKim with House America Financial. I'm a mortgage loan officer right here in Los Angeles.
Woo woo! So, Brian, how are you feeling this week?
I'm feeling good.
Yeah,
Yeah, good activity out there, helping families, helping borrowers, closing some deals.
good.
Rates
Good.
have ticked up just a bit this week with some inflation data coming out a little higher than expected, but that's not all bad because I think for qualified buyers, a little bit of higher rates at this time. I do think that they're going to come down, but I think a little bit of an uptick in rates might help uh, some situations not be as competitive as maybe we saw maybe 30 days ago, 45 days ago. So it's good.
Yeah, no, that's great. Something that I think might be helpful for buyers. So, why are rates impacted by inflation? How is that? How do those correlate?
Yeah, so basically, inflation kind of devalues the value of the dollar, if you will, of money. And mortgages are bought and sold and traded just like any other sort of bond, right? So it's a fixed income asset.
Hmm.
So we have a rate, it's fixed for 5 years, usually 30 years, and that rate is fixed. So when the value of money kind of goes down, it makes those mortgages, it makes bonds less attractive. Okay. So there's a sell off. And when there's a sell off, it causes rates to rise. So
Hmm.
investors want a higher rate to lend that same money because the without getting too much in the weeds, the value is it's devalued, right?
Yeah, yeah.
So inflation is like kryptonite for rates. We don't Rates don't like inflation. It causes rates to go up. Um, the good news about inflation is that the data that's coming out, although it's a little bit higher than what the market was predicting, it's not nearly as high and as hot and crazy as it was a year ago or 2 years ago. So everything that the Fed has done over the last couple of years is working. It's just taking longer than maybe we all kind of would have hoped.
Sure. Yeah, no, that makes sense. That was a really good explanation. Thanks, Brian. And if anybody wants, Brian just posted a video on his Instagram. I think it was this morning or yesterday, kind of breaking down the numbers of a house price point like right now versus with a different rate at a different time. It's a really great video. I'll make sure that his Instagram is in the description, but go check that out on his Instagram page. So Brian, let's hop into like where are the rates right now this week? So we're a little bit, this is my bad, everybody. We're a little bit late this week for our video, but it's Thursday, March 14th. So where are rates sitting right now?
For the most part, conventional and jumbo rates, so we're kind of back into the high sixes. And in some scenarios, we are back into the low sevens. Um, we were seeing rates more in the lower sixes, mid sixes, maybe high sixes, and now we've kind of crested into that high sixes, low sevens in many cases, not in all. If it's an FHA loan or a VA loan, we're looking at probably low sixes, possibly high fives in certain situations, but rates have risen this week about a 0.25% to maybe 0.375%. So we're still kind of in that 6-7 range. Most predict, as well as myself, we're going to see rates back in the fives. I think mid fives. Some people think low fives. Some people are saying high fours. I think that is still true. I think that's going to happen. The $1 million question is when.
Yeah.
And I think what some of this recent data coming out of Washington, D.C. and these different economic agencies, I think it's just going to take longer.
Yeah.
I don't think it's not going to happen. I just don't think it's going to be spring, summer 2024. Maybe it'll be winter 2024, early 2025. We'll see.
Yeah, time will tell. Thank you for kind of breaking down the rates right now. That's really helpful. So I know for buyers, especially first time buyers, when they're looking to get pre-approved, one of the big fears I know going in before even reaching out to a lender is, oh, I don't know if my credit score is good enough. What do I actually need? And there's so much conflicting data online. So Brian, how important is a credit score to getting a mortgage for a home?
It's important, but I wouldn't say it's the most important thing. I would say the most important factor is going to be income.
Okay.
So is there enough income to show the ability to repay the debt, the payments, the mortgage that is being taken out? Without that income, in whatever form we can use to qualify it, we can't do much.
Yeah.
But credit score is important. Some programs like the FHA, VA loans, we can do loans with as low as a 580 FICO score, 600 FICO score, 620. Conventional loans generally need a minimum 620 to 640 to qualify. Jumbo loans typically need a minimum 680 or 700 to qualify. Okay. But the big impact with credit score is really going to be, yes, you may qualify, but the interest rate is going to improve the higher the credit score, which of course impacts payments, which of course impacts budgets. So I wouldn't say it's the most important thing. We have some flexibility when it comes to the score, but the higher the score, certainly the lower the payment, the lower the rate.
Yeah, no, that's good. So if someone said maybe has a little bit lower score than some of those kind of minimums we talked about there, what would be steps that they could take to improve their score to get ready to buy a home? Maybe if it's not right now, but maybe in a year or two. What steps would you advise taking?
So the first thing is that getting pre-approved and running a credit is not going to ruin someone's score. I think there's a lot of fear around going through this process and getting pre-approved. We typically do a soft credit check anyways, which has no impact to the score. So running someone's credit is not going to take them from good credit to bad credit. That's just a myth. By far, the most important thing when it comes to credit is just making all of your payments on time. Any sort of late payments, any sort of collection payment is going to really damage the score. It could take away 20, 40, 60 points. But then one other thing that a lot of people may not think about is keeping the balance. The balances, let's say on credit cards, keeping that balance, if possible, to less than 20% of the credit limit. So for example, if we have a credit limit of, let's say, $5,000 on a certain card, and the balance is, let's say, $2,500, so that's 50% of the limit, that actually, even if you've made all your payments on time, you're going to lose some points because the card is approaching kind of the limit. It's approaching kind of maxed out, if you will.
Yeah.
So in that scenario, if the limit is 5,000, if you can keep that balance to under 1,000 or less, that's going to be beneficial for your score.
Yeah, no, that makes sense. So so probably what the first step is, let's say for buyers who are thinking about buying a home in the next couple of years, is probably to reach out to Brian or a trusted local lender to start that process to see where you're at, see what sort of deficiencies we want to work on,
Yeah, of course. I just had a phone call conversation yesterday with a borrower that might be inheriting a home. She wants to buy out some family members. At the properties in probate. It's probably going to be a 9 month to 18 month process. But we just had a quick conversation, 5 or 10 minutes. She had some questions. I was able to kind of just do a pre-qualification, not a full pre-approval. She didn't send me any documents. We didn't even do a soft credit check, but she found it really helpful because we talked about based on her income and kind of based on her car payment, this and that, and the loan that she's expecting to need to buy out some family members, kind of what the range is. Is she in the ballpark? What can she do? So, we could go through the full pre-approval, and that's going to be the most solid review. But even if it's a 5 or 10 minute phone conversation with somebody who is, uh, reputable and kind of can guide, that's, I think, really helpful. Just so that the customers kind of on the right track or on the same page, or that expectations are kind of somewhat aligned. What we
Yeah.
don't want to have happen is, somebody wants to do this and but they wait and they don't really talk to a great realtor, and they don't really talk to a lender. And then, 6 months goes by, and then they're ready, and then, everything's out of whack.
Yeah.
And if we have time to kind of massage those things or fix anything with credit or anything else, usually we can find great solutions, great options. But don't wait.
Yeah, yeah, for sure. I think so many people forget or don't know that having a dedicated, trusted team is key to buying a home. I think so many people just don't know, or maybe had a poor experience in the past, and so they don't know the best way to set yourself up. So yes, I totally agree with Brian. Reaching out to a trusted realtor and a trusted lender to start that process, to have people that you can ask questions and make a solid plan is going to go miles to get you where you want to go. Brian, thank you so much for talking about all this stuff and being here this morning. As always, if anyone would like to start that process and just find out where you're at and what steps are going to be needed to get you where you want to go, Brian's contact information will be in the description, as well as mine. If you're in the LA area, also let us know. We'd love to meet you at my office or Brian's office, and we can talk through your particular situation. I think that's all we got. So Brian, thank you so much, and we'll see everybody next week.